everybody, and welcome to the Emerging You channel. Whether you're looking to get your taxes done, learn how to become a tax preparer, or here just to grab some helpful tips, you're in the right place. Just a heads up, everything I share here is for educational purposes only. It is not tax or legal advice. Be sure to check out my ebooks, trainings, and join the Tax and Wealth chat room. I'll be placing all the links below, but in order to stay up to date on all the latest tips, you have to join the chat room. Now, let's dive in. Today's topic is going to be crypto tax updates for this year. A lot of knowledge that you guys do need to know. How many of you guys know what crypto is and where it even started? How do you feel about the government stepping up with more formalized reporting? Do you think it's going to make crypto taxes easier, or will it just add another layer of complex to your tax returns? Let me know what you guys think, because the introduction of the Form 10 from the IRS should be implemented in 2025, and it's going to be a game changer for a lot of the crypto investors. All right, let's go ahead and get started.
Crypto gains are subject to capital gains taxes. The exact capital gains tax rates will differ from how long you have held on to your crypto. So we're going to talk a little bit about short-term capital gains and long-term capital gains. Long-term capital gains have better tax treatments and have a maximum tax rate of 20%, whereas short-term capital gains are taxed according to your ordinary income tax brackets. This is the big difference between holding on and not holding on. Okay, let's move on. Taxable.
So before we go on to the next part, like you said, you got long-term and short-term capital gains. Long-term definitely favors more than short-term. You have a lower tax rate if you hold it longer, more than a year. If you hold it less than a year, you're going to be considered a short-term tax rate for that one, or short-term capital gains. Now, are you more inclined to hold for a long term to benefit the lower tax rate, or are you guys just a short-term buy it and then turn around and sell it?
Crypto events. This is where it gets a little more complicated, so pay close attention here. There are a number of different kinds of crypto transactions that can qualify as a taxable crypto event. A taxable event is an event that triggers taxation, meaning you're going to pay taxes on it. Here are 4 taxable events related to cryptocurrency that can happen for you. Spending your crypto on goods or services, swapping your crypto for another crypto, selling your crypto for US dollars, or swapping your crypto for a stable coin. If you did any of these 4 things, you most likely will owe crypto taxes to the US government. But remember, not every crypto transaction triggers a taxable event. So let's talk about.
If you're doing this, let me ask you guys, how are you tracking this? Do you guys use a manual tracking, or have you found some type of crypto tax software like CoinLedger to be helpful? How do you make sure everything is accounted for, especially if you trade often? How are you guys tracking this?
About non-taxable crypto events. Here are a number of non-taxable crypto events: buying crypto, holding crypto, transferring crypto from one wallet to another. You see, the reason why none of these things are taxable events is because none of them actually involve you selling crypto. You can't make capital gains if you don't sell the underlying asset. So yes, this means that you could hypothetically buy Bitcoin and hold it year after year, generating incredible amounts of unrealized gains without owing a single dollar in taxes. And this is a major advantage of Bitcoin over using real estate as a store of value. Both Bitcoin and real estate tend to rise significantly in value over time, but in real estate, you still owe property taxes every single year, in addition to the capital gains taxes you will owe when you go to sell the property down the line. Also, unlike real estate, Bitcoin doesn't have any maintenance cost, which is another nice benefit. Now, next question I get asked is,
Let me ask you this, because he did touch base on real estate. Now, we know real estate comes with property taxes. Well, coin doesn't have any maintenance costs, but you do deal with coin going up and down, the volatility in the value. Which one feels like a better fit for you? Which one do you feel safer with? Investing with real estate or investing in crypto, and why?
actually have to pay crypto taxes? There are some people who think that you don't actually have to pay taxes on your crypto profits. This could be because they think that the IRS can't actually track their crypto gains, or because they mistakenly think that the IRS considers cryptocurrencies to be currencies for tax purposes instead of property. So I just want to tell you a quick cautionary tale here in case you fall into this camp of people that think you don't pay taxes on your crypto. In 2024, one of the earliest and best known advocates of Bitcoin, Roger Ver, aka Bitcoin Jesus, was charged with committing tax fraud. and causing a 48 million tax loss to the United States. Ver renounced his U.S. citizenship in 2014 and was required to pay the exit tax that all Americans who expatriate are required to pay. However, Ver allegedly underreported the amount of bitcoins that he owned. He is now facing decades in prison if he is found guilty. Roger Ver's case is proof of the fact that the IRS can track your crypto tax obligations. So don't think that you can hide your crypto profits from the IRS. It is far easier to just pay what you owe. So what changes are coming to crypto taxes in 2025 that we need to be aware of? There are a number of changes that could be coming to crypto taxes that are definitely going to happen in 2025, and there are some that might not happen. Let's talk about the ones that are definitely going to happen first. Starting in 2025, the IRS is launching a brand new tax form for cryptocurrencies. This tax form is called 1099-DA. DA stands for Digital Assets. The form reports your crypto activity to you. It will be issued by entities such as crypto exchanges and brokers. So, if you bought or sold cryptocurrencies using sites like Coinbase, Gemini, Kraken, then expect to receive a 1099-DA form reporting your crypto activity for the tax year 2025. Many people will not be happy to learn that there is yet another tax form that they have to worry about. However, the good news is,
I don't know about you guys, but I think that might be the best bet is issuing these 1099 forms, because it's going to be an easier way for those who are trading crypto, keeping track on their profits and whatnot. I know it's another tax form to worry about. I know it's another tax form for us to file, but it does give you a proper way to kind of acknowledge that profit and give you more of an idea of what you need to file, instead of people trying to track their profits and loss on a separate statement or a spreadsheet and their totals are off or they're underreporting. It just seems like it'll be more of a headache doing it the manual way.
Form 1099-DA could actually make it significantly easier to report your crypto taxes. After all, one of the biggest complaints that people have when it comes to doing crypto taxes is that the entire process is extremely overcomplicated and difficult. So hopefully this form will alleviate some of the stress that many CPAs and tax professionals have when it comes to reporting this gain. Now, let's talk about some crypto tax changes that might happen in 2025. As we all know, Donald Trump won the 2024 presidential election. During the later stages of his campaign, Trump started to get more and more passionate about Bitcoin. He spoke at the Bitcoin 2024 conference in Nashville, Tennessee, and during his speech, he announced that he planned for the United States to start building a strategic coin reserve. This is a very strong show of support. Trump didn't stop there. He also said that he supports the idea of doing away with capital gains taxes for Bitcoin entirely. Many people make the argument that
if Trump goes away with capital gain taxes, how would that affect you? Do you guys trade Bitcoin? I know coin was a big one. It still is a big one. Do you guys trade it? And what are your thoughts about Trump wiping out the capital gain tax for it?
that Bitcoin is a form of money and therefore it should not be subject to capital gains taxes. After all, when you use cash to buy a gallon of milk at the grocery store, you do not owe capital gains taxes when you give the money to the cashier, right? Capital gains taxes were eliminated for Bitcoin in the United States. That would dramatically change the entire industry as a whole. This would not only unburden people from enormous amounts of compliance work on the tax end, but it would also allow people to transact in Bitcoin. Right now, Bitcoin primarily serves as a store of value, not as a unit of exchange. But who knows? What will happen if capital gains taxes are completely removed? It could become a unit of exchange. In addition to supporting the elimination of capital gains taxes for Bitcoin, Trump has also proposed eliminating capital gains taxes for all cryptocurrencies that are issued by US companies. This would mean another massive game changer to the tax code. Trump's apparent motivation for this proposal is to make the US a global hub of crypto innovation. He believes that removing capital gains taxes for cryptos originating from the United States companies will make US-based cryptos much more competitive in the entire marketplace. It could also incentivize crypto entrepreneurs to form their companies in the US rather than offshore. The bottom line is that while Trump may still be new to crypto, he understands the increasing importance of this sector from a financial perspective. I would listen to other people too who are also jumping into crypto. If Trump succeeds in eliminating capital gains taxes for Bitcoin and cryptos issued by US companies, then he may well turn the US into a global leader of crypto innovation. I don't know about you guys, but this sounds like a lot of good things to me. This is why you need to be out ahead of this and start getting yourself educated. Make sure you plan for your crypto taxes. The next thing I want to discuss is preparing your crypto tax.
What are you guys' thoughts on it so far? I do see the world changing and basing it around crypto and whatnot, making crypto more popular, making it easier to trade, make it more beneficial. I see that coming. But whether or not it's a good or bad thing, what's the pros and cons that you guys see in it?
Even though it's possible that you won't have to worry about crypto capital gains taxes for certain cryptos if Trump's proposal becomes law, it is still important to make sure you are prepared just in case they don't. There are several different things that you should take into consideration to prepare for your taxes. Arguably, the most important is to make sure you actually put away enough money to cover your crypto tax obligations. Taxpayer, I'm talking to you right now.
This right here, if you guys listen to anything in the video, listen to this. Keep some of those profits to cover your capital gains tax. It is the worst ever when you filing some of these taxes and they find out they have to owe and they don't understand the capital gain tax that they have to pay on their profits. It hurts them the most when they're doing it so often and it's a short term capital gain instead of holding it longer. But everybody has their own trading styles, and I understand that. But if you don't understand your capital gains and what you're going to have to pay back on that, that's going to hurt you. So this is great advice. Keep a percentage of your profits and set it to the side to cover your capital gains that you're going to have to pay back.
Sometimes it goes way up and sometimes it crashes. So if you cash out when it goes way up and then it crashes, you could have a huge tax bill without a lot of funds left to pay your tax bill if you don't budget correctly. That's the first thing that I will say. Make sure you set aside enough money to actually pay your crypto taxes. The next thing I will say is that you need to have a way to accurately track your crypto transactions so that you know what your crypto earnings are for the year. If you only have a handful of transactions, then it's probably straightforward. However, if you're someone who trades crypto and you have hundreds or thousands of crypto transactions, obviously, then this is going to be a lot more complicated for you. If this is you, then you might want to consider working with a tax professional right now who specializes in crypto taxes. Also, be aware that there are some companies that offer software programs that will track your crypto transactions and it will track your tax burdens. Coinly.
I just want to point out for those who do trade crypto, even stock, how much of a headache it is for us tax preparers when we file your taxes and you don't have anything in order. And we got to go by each transaction or ask about each transaction, go over the loss and the gains, do the calculations. It's a headache. So if you guys are going to do this, do it the right way. Have some type of system set up, or even like Carlton mentioned, sign up for one of these softwares that tracks your transactions for you guys.
And CoinLedger are two examples that come to mind. I'm not endorsing these companies. I'm not sponsored by these companies. I'm just mentioning them. These are options available on the market if you need a product to help keep track of your crypto transactions. Use them at your own risk. Now,
all right, you guys, one last question real quick. Now we know crypto is growing fast, but where do you see it going in the next few years? Will we see more regulation, or will coin and other cryptocurrencies start to thrive as an alternative to currencies? How do you think the future will unfold with the crypto investors or for the crypto investors? Let me know you guys' input down in the comments. But as always, thanks for hanging out. Remember, this is not legal or tax advice. It's all about giving you the tools to understand taxes better. If you found this helpful, like and subscribe, and check out my ebooks and my trainings, and join the tax and wealth chat room for all of the latest tips. I'm placing all the information below in the comments. See you next time.